Good afternoon, everybody. Welcome to TraderMerlin. It is your Wednesday edition, hump day, middle of the week. Exciting stuff. Of course, if you saw the headline that I put out there for the show for today, it's going to start with Facebook Meta. Meta gets crushed. That's where I'm going to begin things today for our 903rd show. I will have a few other things I'm going to cover on today's show as well. I've got a viewer question about time frames and questions about the Japanese yen, so I'll talk about that one as well. But let me start things off with a gratuitous self-promotion. I'm a horrible marketer. I generally don't promote myself, but I was invited to speak up in San Francisco again. Happy to go up there. It's just a day trip. I'm going to fly up in the morning, give a presentation, and then fly my way back. I was going to stay up there, but it's all coming out of my own personal pocket, all the expenses. So I figured I would just come back here rather quickly. But here's the details to it. As part of our today's market highlights, I will be at the Money Show Investment Masters Symposium. Now, I'll be honest, I don't know why I keep getting pigeonholed into just cryptocurrency as I trade just about everything, but they always seem to want me to come up there and talk about crypto. So I'll be I'm going to be on the 9th. So I'll be there Thursday at 10, I believe it's 10:45 in the morning or 10:30 in the morning, something like that. I'll get you more details when it happens, but I'll be presenting at the Money Show Investment Master Symposium. My topic is filtering chaos, how to choose the right cryptocurrency and digital asset investments. And one of the main reasons I chose this topic is I think there's just so much garbage out there. There's so much fluff. There's so much junk. There's so much trash that can just destroy people's accounts and meme coins and shit coins. And I figured probably a good idea for anybody who's particularly thinking about building a portfolio. What do we look at? So that will be, again, I am going to be May 9th. And I will copy over a link here for anybody who wants to go to that conference. They're always pretty fun. Well, no worries. Yeah, I guess I am good at crypto speak, Big Ab. I guess I am. There's a code for anybody who might be in the Bay Area. There's a ton of other great speakers that'll be giving presentations as well. With these events, especially with the Investment Master Symposium, it's not just a specific asset. It's everything. You get REITs and real estate investment trusts. You get oil and gas. You get natural resources, all sorts of different investment vehicles, which I think opens up a lot of different possibilities. And digital assets, right up there with that kind of alternative investment strategy. So again, I'll be up there on the 9th. I'll be presenting on Thursday. That link I sent you is a registration piece. You can see the full speaker schedule if there's somebody else that you would like to see there as well. Oh, graduate from high school. Right on. Well, I hope you have a great trip out there. I will have a fantastic presentation on my side as well. No worries. Long drive from New Jersey. I get it. I don't believe they're doing webcast. I actually thought that they would be doing webcast, but I'll ask them about that one. Maybe they will. Who knows? We'll see. So there you go. That's my gratuitous self-promotion, and I'm done. All right. Let's look on to our second topic du jour, which is this graphic right here. A nice Facebook logo embedded in the dirt, because as they came out with earnings today, it was embedded in the dirt. Here is your chart on the 1 minute time frame. And actually, let me scroll past the close. This is what it looked like during the trading day. Like, it looked nice. Headed out, you were posting some nice gains going into the close, right? Great, fantastic. And then all of a sudden, look at this 1 minute bar right here. Boom. Just that one candle. Look how much it distorts the chart. That's one candle. Crazy. Continued to slide in the after hours, though basing a little bit, and I would expect it to be kind of an oversold situation here. Down 11.29% in the after hours alone. 437.63 is where it's at right now. We closed at 493.50. So you're talking a 55, 56 point drop. Pretty impressive. And is it warranted? Is this one of those things where tomorrow morning I'll be looking at maybe going long calls on this as people panic? Well, if you look at the numbers, it actually isn't that bad. Here are two important numbers that were reported for today. Number one is their earnings per share. They made $7.41 versus an expectation of, sorry, did I say $7.41? Dyslexia setting in there. $4.71 per share, and the expectations were $4.32. So they crushed expectations on their earnings and on their revenue. $36.46 billion was the actual number, and they expected $36.16 billion. So all in all, they're definitely beating what the market is expecting of themselves. Now, there were some issues with their reporting, and basically it was forecast going forward. Their forecast going forward looked worse than expected. And honestly, looking at the numbers, I don't have them all here in front of me, they didn't seem as bad as this chart would dictate. So I actually will be watching this one tomorrow. You know, last time I saw a big drop like this, and I made a big play on it, was Amazon. And I ended up going long 80 calls on Amazon back when they had a horrible earnings announcement, and within a couple of days, it was screaming to the upside. Now, I don't know if Meta is going to do that. I'll put a line where it's at right now to give us a sense as to where it might be opening up. So here's where it's at right now at 429.40. And let's go back and look at this daily to see where it lines up. Is it in any area of interest? And actually, no. It is well past this origin of the gap here, which is 452. It's actually much, much lower in the middle of this gap. So there is no supplier demand zone that would be relevant as far as causing a potential bounce in price at this level. So that has me a little bit concerned, but we'll see. Maybe tomorrow when all the panic, you sell the 400s, which would be, you know, another $30 away from current price if it opens up at current valuations. And there might be some great premium because right now it seems like people freaking out on Meta, which has been a major catalyst for this move up. You know, we talked about things slowing down a little bit because it hasn't been making new highs over the past couple of weeks, and now clearly giving back a lot of those gains, particularly over the past month and a half. We'll see if that holds tomorrow morning, but that might be a bad sign for your broader markets overall. Now, don't forget, we've got Microsoft and Google reporting tomorrow after the close. Right now, as you can see, it is a little bit of a pull down on the, let's put a 5 minute here, a little bit of a drag on the NASDAQ 100 futures, which were doing fine until that earnings came out and you noticed the big pull down here. Now, someone messaged me, and I just didn't get a chance to write it in the slides here, saying, you know, what is more impactful this week? Is it going to be Tesla, which reported, Meta, Google, or Microsoft? Well, it depends on what you mean by impactful. If you're looking at overall impact on the market, then Microsoft is the clear victor there. The main reason, it's the number one component in the NASDAQ 100. Let's check real quick and see what it is in the S&P. Let's see. 1 second here as I type this in. Yeah, it really depends on, I don't remember the S&P. I think that Microsoft was the number one, but I want to be sure here. Let's go to the companies, and I'll share this with you guys. Yeah, so it's number one in the S&P and the NASDAQ. So as far as what's the most impactful, I would go by this list right here. It just literally in this order. Microsoft number one, Apple number two. Strange enough, NVIDIA number three. Now, this is not the same for the NASDAQ. NASDAQ is going to be different than it is for the S&P. Meta is a little bit higher up. But you look down here, you've got Tesla is 15th on the S&P 500, only 0.94%. So really not that much of an impact, whereas I believe it's 2.5% on the NASDAQ 100 there. So let me bring up another chart here, and I'll show you the NASDAQ 100 so we can do a kind of a compare and contrast. But the most impactful one, without question, is going to be the NASDAQ. Is going to be Microsoft. So here's your NASDAQ 100 holdings. So you can see the weightings there. And they're pretty much the same, except you remove all the Dow components. So NVIDIA is number 3 here, Amazon number 4, Meta is number 5, and that's 5% of the NASDAQ 100, whereas Meta is only 2.56% of the S&P 500. So it certainly will have an impact, much bigger than Tesla's impact, right? As we just showed you, S&P, Tesla is only 0.94%, and on the NASDAQ, Tesla is 2%. So it's a lot weaker impact, but to the question of, you know, what is the most impactful for this week, Microsoft, without question, is number 1. Number 2 on that list would be Meta, followed by Alphabet, followed by Tesla. So those are your winds out the week of earnings there as far as the most impactful. Dropping again. Did it just break down below those levels? It may have happened right as we were talking about it. Oh, wow. Yeah. Woo. Well, heck, we might get that 400 level. I'm going to move this line. Jeez, what a big fall. Just for people who might be somewhat new to trading, let me just show you this real quick. What you'll notice here, you see dramatic moves. Like, these are substantial, painful moves. However, when you add in your volume on this, you'll notice that these moves happen typically in the after hours on a lot less volume. So these last two 5-minute candles, this last 10-minute window here, those bars aren't dramatically high volume, but the liquidity in that period of time is gone because there's no market maker participant. So basically the bid is just dropping out, meaning there's no requirement for anybody to put buy prices here, and it just falls very, very quickly. Now, going back to our chart, I mean, we're currently at 406. This may change my perspective on this one tomorrow because 394 is the origin of this big gap. Might get some really nice premium for this one tomorrow, but I'll let you know how I play this and if it pans out for me as well. Wish I put my buy order at 400 instead of 410. That's okay. Yeah, I mean, we'll see what happens out there tomorrow. Did you, let's see. Lori, did you trade in the after hours? Are you using limit orders in the after hour session? So you're now long at 410? Or, 410? I wouldn't be too concerned with that. I anticipate there being a pretty significant bounce tomorrow on this one. I mean, a lot of times they get really overdone like this, and the numbers weren't atrocious. I mean, they're beating on everything. If you look here, EPS, they were supposed to make $4 and, again, 32 cents per share. It came out 471. This is pretty good. I mean, they did really good on those two numbers. Okay, cool. It's okay, Lori. I think you'll be okay. That was a pretty strong, powerful sell-off right there, but I really don't think it'll be that bad. I feel good. I just covered my puts and bought 200 shares at 400. There you go. There you go. Perfecto. Yeah. I'm not sure if I'll just go long calls on this one, but we'll see right as it opens in the morning is usually when I'll make the trades on these big the big behemoths that you know are stable, good companies. I actually do like to go fairly large on those ones. I don't risk them going bankruptcy anytime soon. But you look at the big run up here. Meta has had one of the biggest runs of all the companies aside from NVIDIA. So it certainly does have some room to correct. But I think 400, you're probably doing pretty good at that price point. All right, so that was your first piece of this. Now, of course, there's multiple earnings coming out today. You had Meta, which was the big daddy. Then you also had Boeing. And Boeing has been in a rough spot. I talked to a couple people over the weekend in Vegas, actually, that were involved with Boeing. I actually met a guy when I host trivia. He was sitting at the bar, and he worked for Boeing as well. And, you know, the general consensus is, do you think Boeing is going to go away? Absolutely not. There's no way Boeing would disappear. Boeing is way too critical to the aerospace industry in the United States, so it's not going to disappear, but yet their pains continue. And their earnings today actually were rather decent, and they still got punished. And I think a lot of it has to do with the continuing little problems they're having. Well, just doors opening up and things like that in flight. So here is your Boeing chart. I drew out from yesterday, or I drew out yesterday's numbers from yesterday's close. It's down 36% off of its highs, which is pretty painful. That's an 82-bar move. Today, you had it jump up on good earnings and then just gave it right back. So there's still, I guess, a lack of conviction of people to buy Boeing. Does not look very good. Now, if I click on the E here, you can see that they were expected to lose $1.63 per share. They only lost $1.13. So they're losing money, which is not a good sign, but certainly a lot better than expected by analysts. Now, their revenue was $16.23 billion. They came out at $16.57 billion. Great. All in all, things look good. I think at some point here I will consider buying Boeing and adding it to my long term, but right now I just can't catch that falling knife, because if I look off to the left over here, let's make a weekly out of this so it's easier for me to scroll. Now, if we look off to the left over here, do you see anything that really jumps off at you as, a great demand zone? I don't. The only one that pops to me is going to be not even a great drawn demand zone, but something like that, which is 142. 142, okay, maybe I will be interested in that one if we get down to that level. But right now, I'm probably going to sidestep Boeing, even though they had good earnings. It's just there's a big dark cloud hanging over Boeing. I know when I flew recently, people were like, oh, I sure hope you're not on a Boeing. I mean, it's that kind of attitude that kind of really hurts a company, even though it's not a death event. It was just little maintenance issues. 1 second. Andre says Tesla missed expectations and went up. Meta beats expectations and falls off a cliff. Yeah. And again, Andres, that's why I did the show yesterday like I did, because it really is about the magic of Elon Musk, right? Tesla had bad earnings, didn't look good, things really kind of slowing down. And then instead of focus on that and how do we make that better, it was let's pivot like a magician and not show you the real trick over here. I want you to be fixated on this illusion. And the illusion is robo-taxis and brand new vehicle lines that's going to make newer vehicles faster and cheaper. And of course, as a shareholder in the market, just focused on that because that means growth, growth, growth. But the actual numbers are starting to show a trend decline. I sold calls against my Tesla today. I sold calls expiring on Friday. I normally don't do that short term, but I'm long from 160. Plus, I collected a bunch of premium. I sold the 165 calls today. Just being really aggressive because I actually think Tesla might sell off over the next few days. Therefore, I was trying to get a little bit more premium for myself. I should have gone in the money at the time, but I sold the 165s to cover my Tesla long position at this time. So great day for me from a Tesla perspective, and got a little nice chunk of premium on what's the demand zone level though, Sharif? Let's go to, I would say on Boeing, you're looking at right around from 140 to 144. Kind of a $4 range right there. 140 to 144. All right. Let's see. The call and headlines focus on supply chain, and that's not the issue. It's assembly. Yeah, I'm not well enough versed in all that. I just know that they were pivoting and focusing on the growth prospects and robotaxi, and really Elon Musk doubling down on the idea that he says we're not a car company. We're much more than that. And I agree. I think that that's been an argument that I think is a valid one. They're not just cars. They are a technology firm. And, you know, if they continue to do what they do with AI, people will be leasing the AI from them or licensing it from them. That gives them another revenue stream. You also have the driverless robotaxis. It's an interesting. Oh, what's a demand zone, Sharif? Sorry. Thanks, Martin. Yeah, a demand zone is just where based off a specific set of criteria, there is a increased probability of prices turning due to institutional involvement. That's what a demand zone is. A supply zone would be where you find a high probability area of prices declining or stopping from going up because of institutional buy and sell orders. That's what supply and demand zones are. Okay, so that was the Boeing side of things. I see RTX. Sure. RTX Corp. From a technical perspective, I mean, obviously things look fantastic. You are coming right in overhead supply. It hit 104 this week. I'll even zoom in a little bit. There you go. Hit 104 yesterday. I actually think you got a higher probability of seeing this thing drift down, even though when you look at what RTX does, you know, I think that they might benefit from Boeing's struggles. If I look at a high level, like what might happen there, well, yeah, I think business could flow to them and flow. I mean, it certainly is going to flow there anyway, right? They are one of the bellwethers out there in the industry, and if they continue to push in defense stocks, you know, you'll see Northrop Grumman, you'll see RTX do rather well. So Raytheon, Northrop Grumman, Boeing, they'll all do well, but I think that Boeing is not going to go anywhere. I think it's a long-term investment. Anyway, next on my list, what did I have over here? Oh, the yen collapse. So we don't talk about this too much, but I wanted to bring this one up because it has been absolutely brutal, and the breakout is intact right now. So this chart's going to be the inverse because this is the US dollar versus the Japanese yen. The reason I put this one on here is this is really a gigantic ascending triangle. There you go. A gigantic ascending triangle that starts from these lows back here in January of 2023. We could draw this many different ways. I'm going to leave it right here for now. And if we left that ascending triangle like this, you know, you're looking at a chart that looks about like that. To me, this is one of those times where you use this chart information, you use the pattern here to anticipate where things are going to go. And you guys know there's a way to measure this using what's called a measuring object, which goes from the base of that or from the peak of that triangle to the base, and that's that vertical bar right there. I have moved that vertical bar to where it breaks out. And therefore, based off this current breakout, which has been screaming to the upside ever since it broke above 152, we've had pretty much up every day. And now the question is, where does this go going forward? Are we going to see this US dollar Japanese yen continue to soar like it is? Well, we have some rate rate announcements coming from Bank of Japan here soon. They just raised for the first time in like a decade. So I would expect them to do something to stop this. If the Bank of Japan does not do anything, we will see this continue to rise, and there is a long shot possibility of it getting this 176. I mean, that at this point, it's a 16% increase in the value of the US dollar against the yen. If I look back off to the left, you're looking at valuations that go all the way back to 1986. The last time we were anywhere near 176 on the USDJPY. And as a side note here, if we do continue to see that, the yen just continue to fall and implode as it is right now, it's just going down, 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 that certainly will have some economic impacts for Japan. But for those of us who are outsiders looking at going to Japan, it presents the greatest opportunity. You're going to get so much more bang for your buck. And, as this thing keeps going, I went to Hawaii last year and I was going to go to Japan. I think I might actually add Japan to my list this year, particularly because I'm getting so much more buying power. I get so much more from my dollar in yen as it goes forward. So, for example, if you went to Japan back in 2012, you got 76 yen for $1. If you went back just a couple years ago before COVID in 2020, you got 102, and now you're getting 155. So more and more yen, it's just more value, more purchasing power for you. So that's a huge thing. And again, I do believe that there's going to be intervention, right? Don't think that just because I drew these lines on here, it's going to get to 176. If unattended and left at its present course, it could easily get to 176. But remember, every time this thing, the US dollar ticks up against the Japanese yen, it hurts. It hurts Japan. It actually should be causing inflation, which we haven't seen, and I just don't get it. Yeah, I know, Thomasina, I want to go so bad. I'm definitely in the mood to go to Japan. Sherry says, so why does the Bank of Japan care about high USDJPY? Isn't that good for their exports and the pay we wanted? Yes. So on one hand, it's great for exports, right? Remember, inflation is money chasing goods and services. In a nutshell, that's what it is. When you have more money chasing the same amount of goods and services, you get inflation in prices. That's technically what inflation is. So when we printed all this money in the United States, we printed all this money, that's more money chasing the same amount of goods and services, all of a sudden we're at 9% inflation. So you're right, Sharif, you're 100% right. It's great for your economy if you're an exporting country. So for Japan, it's great because now everybody that wants to buy Japanese products can buy more of it. There's the catch. It's exactly what I said, but just inverted. We can now buy more Japanese products. So we're going to be putting more money into their economy, meaning more yen being purchased, more goods and services being purchased. What's going to happen to the value of those goods and services? Those goods and services should be going up in price. The Japanese are going to raise those prices because of demand. When that happens, then you get inflation inside your own country, and that's the double-edged sword. It hasn't hit Japan yet. I have no idea why. I've talked to a lot of my Forex traders. I've talked to a lot of economist friends I have, and every one of them is like, this is going to crush Japan. The inflation numbers are going to get out of hand here at some point, but they haven't. And again, maybe that's government manipulation, hiding the facts. But when you keep your interest rates at negative 0.1 for so long, you discourage saving, you force people to go spend. That right by itself should have caused some degree of inflation. Now you have the currency so weak that it's bringing in more and more demand. That's, I'm glad you're here as well, Chio. So that's my take on it, Sharif. Yes. Look, the U.S. did it too, right? What did we want? We wanted the weakest dollar possible. Well, that was the key. So what do? They flood the market. Flood the market with dollars. The more dollars they flood the market, it crushes the value of the dollar. In theory, you could buy more. In theory, when the dollar is really weak, Europe, Japan, other countries would be coming to U.S., buying our goods and services. And to some extent, it did work, but that also causes inflation. Let's see, Infinity says, the major hotels in Japan are just raising their rates to match the dollar, so they're still crazy expensive, but everything else is cheap now. Yeah, and that kind of goes to my point, which is, if I'm a business over there, I'm going to be raising my prices. Yeah, I know I have more demand coming in, so yeah. I'm glad to see everything else is cheaper. I do plan on going. Do you think there is a currency war to weaken Chinese yuan more? No. I don't. I think at this point the U.S. doesn't want their dollar to be appreciating as much as it is. I don't think that they want that. The higher that dollar goes, well, the higher interest rates go, the more demand there is for U.S. dollars. So it's kind of this double-edged sword. You know, it's nice to have a normal yield curve, which is what we should have, but it's not long into the yield curve drives up. That'll put more demand on dollars. That'll push the value of the dollar up, and that could hurt our economy even more. So, I mean, economics is such a very fine machine. There's all these little variables that are moving parts that could cause all kinds of problems. So, I don't believe that we want our dollar to be as strong as it is. If we look at the Dixie, let's go dollar index here. If you look at that dollar index, there you go. Going back to 2008, we've seen it increase significantly. And the stronger this gets, the stronger our US dollar gets, the more it costs us to repay debt. And that's certainly something that we would like to repay cheaply. So have a weak dollar, repay that debt cheaply. I don't know if you guys saw, I mentioned it in my session today, my crypto session for the XLT for OTA. If you have a chance, type in Senator Loomis, Janet Yellen. So today, I think it was today or maybe yesterday, Senator Loomis was absolutely lambasting Secretary of the Treasury Janet Yellen on some of the new banking rules and disclosure, transparency, privacy, but really going off on both sides of the aisle. Like, how can you as a Republican or a Democrat sit here with a straight face and tell everybody everything's fine when you're the ones that create the problem? We're over here complaining about these little tiny things, but you are the ones that created this problem. Let's fix it. Bravo. Calling out themselves. At least one senator is doing that. What's your opinion on what is happening with Bitcoin? Well, I don't think anything's happening with Bitcoin. Chio, are you an OTA graduate? Are you part of OTA? If you are, I would go back and watch my XLT general session today. I did a pretty lengthy piece on the halving, forecasting, and all my thoughts on it. So I'm not going to go into that here. Who do we need to call to get the S&P downside ghost print on top? Yeah, right, VV? Wouldn't that be nice? You haven't seen any new ones recently, have you? Give me that ghost print. It'd be great. All right, what else do I have? I have a question. I need to go pull this one up because I didn't actually put it into the slides yet. This is from Tomas. And there are a couple different questions I want to get to, but this one's from Tomas. And here is the graphic I use for that one. There you go. Time frames. My last piece. And we'll talk about TikTok as well. Tomas says, I placed an order for TQQQ, daily time frame. My exit must be the same time frame. No, it does not need to be the same time frame. If you're buying something, there's been many times in my trading career, and I was predominantly a day trader back in the late 90s. Now I'm more of a swing trader. A couple days, couple weeks is fine with me. When I was a day trader, there'd be times where I'd find myself in a nice winning trade. Let's say I was trying to make 30 cents on a trade, day trading. I make 30 cents, and then it's 40 and 50 and 60, and by the end of the day, I'm up 75 cents. I might take a little bit of profit and just let that second half run. My exit is no longer on that 5-minute chart that I was using. It might now be finding supplier demand zones on a higher time frame. Maybe going to the hourly, to the 4-hour, to the daily, to the weekly, depending on what my thought process was for letting it run. So you don't have to enter or exit on the same time frame. It's all mix and match. You can do whatever fits your scenario best. The thing that's the most important here is not you're targeting on different time frames, but just making sure that you have an exit strategy should things start to go against your position, whether you're long or short. So that was that question there. And last one, someone asked me, why was Facebook hurting so bad because of what went on with TikTok? So understand what's going on with TikTok is President Biden signed today, basically telling the holding company, I forget what the name of the company is called, but the owners of TikTok need to sell the U.S. operations. Can't be a Chinese-based thing because the belief is that Chinese companies have to report all data to the Chinese government, and therefore all U.S. citizens' data that's using TikTok would now be a part of the Chinese database. I'm going to go ahead and tell you it's already there. They've got our database. If we're using social media platforms and things like that, there's been many before TikTok that were based from China that people have used. So, when you guys sign up for these services, there was one a while back, which was awesome, by the way. It was an app, and you could take a picture, and you could age yourself, right? You could say, well, how would I look like at 70 or 50? Make me a teenager again. It was awesome. But you had to put in a bunch of personal information to download that app. They've got that, plus now they have your photo for everything that they need it for. So I would argue database is already built around information on American citizens in China. That said, nothing is going to happen with this for a year. There's a year for them to figure out what to do with this. Are they going to sell the U.S. operations? If they don't sell within a year, President Biden can give them an extension. But what will probably happen is the TikTok board will just drag their feet and wait till the election and hope that they get someone else in office who's going to be a little bit more amicable towards this situation and maybe just goes, forget about it. This was stupid. Let it go. That's my guess. If we get Biden reelected with the current administration, then we'll see what happens in a year. But this is not going to impact Facebook at all. For now, it's a non-factor. Nothing's going to change, so I wouldn't think that this is going to tick up on Facebook whatsoever. Now, next year, if we do get to the point that they are officially banned from the United States, I don't know if that would necessarily pop Facebook a lot, but I think alternative social media platforms might benefit from it if TikTok is in fact banned. But for right now, we don't have to worry about it. Okay, but you've not been able to attend the courses in the last 3 weeks due to work. Okay, so Chio, yes, you are. Okay, so you can go there, Chio. It should be recorded and in the database. So if you go to your student portal, you go to XLT General Sessions, you'll see that I have a TikTok. I have a video recorded there, and you can fast forward through it. I did probably about 35 to 40 minutes kind of on Bitcoin, this 4-year cycle in detail, explaining each step and kind of what I think is going to be happening over the next couple of months and kind of forecasting where it's going to go. But right now, I don't think there's really anything noteworthy to be speaking about with regards to Bitcoin. Let's bring up the price chart here. There we go. And I'll bring up Bitcoin futures, which was down over 3% today. This is our weekly. Let's go back to our daily so we can kind of see what happened today. No big deal. I've been saying for a while that I think the 160 or 61,000 mark is a pretty important one. We have not been able to close below it. Of course, there's still time. We might close below it, but for right now, we're not. And at this point, that yellow box kind of represents my area of interest. It's been stuck within inside of that range since February 24th. February 28th. So really just kind of been stuck sideways. Tim says, can you have an economist come on? I can. I mean, I have John O'Donnell, who is one of my, I would say, economist friends, and he's more of a macro guy. But yeah, if you got anybody in mind, let me know. I can particularly ask them. But sure, I'll ask some economist people out there. Your session is on OTA calendar also? Yes. My session is on OTA calendar. So if you're our focus, my focus session should be on there as well. Those are typically on Tuesdays, but today was the XLT General Session. And I'm going to do another XLT General Session in May. I think it's May 20th. I'm not sure. It said 20. Actually, I can tell you right now because Kayla asked me to switch schedules with her. So let me real quickly see here and I'll tell you. My next XLT General Session will be May 15th. So May 15th, I'll do another XLT General Session. And typically, it's just all around cryptocurrency and digital assets. So we can talk about whatever you guys want in that session there. Okay. Let me deviate from that. And I want to talk about one other thing here. So in the question from Tomas that was dealing with time frames, that's why I have this graphic up here, he asked about placing an order on TQQQ. So I have to do a personal caution here. If you're using anything that is leveraged, and Mike, this goes for you as well. Mike sent me an email, which I'll probably get to on tomorrow's show, Mike, dealing with the different derivatives of Tesla. Like if you can't just buy Tesla, are there ETFs that track it? And yes, there's double, triple long, triple shorts. That type of stuff is great for short-term trading. So in TQQQ, right? So if you look here, this is the ProShares Ultra Pro. This, if I'm not mistaken, is a triple. This is a 3-to-1 ETF. So you have QID is going to be double, and I'll show you here in just a second why this one's so dangerous. But you understand that if you're using any leveraged ETF, please make a mental note of this. Do not hold them. They are not long-term investment vehicles. They will destroy your account. Okay, this is a bad sign if you are in that. Okay, let me caution you again that one very, very quickly. QQQM, yeah, let's see. I didn't know the QQQM. Yeah, this is Invesco 100. No, this is a normal one. This looks like, and honestly, it looks like just a proxy for QQQ. It looks like the same thing. So what I could do here, let me add on top of this QQQ. I think that these look the same. Yeah, these are pretty much lockstep. So this is just Invesco's version of QQQ. I don't think there's anything different there. The big difference happens when you start to line these things up. So let me show you real quick. I'll go to stock chart. So there's a really cool thing here at stockchart.com. You can do what's called a perf chart or a performance chart, and you can compare one against the other. So here, I'll show you right here. I'm going to go and select perf chart right here, and we'll put in QQQ. We'll put in QID, which is QID, which is double short. That's the ultra short, and let me make sure that's correct. And let's just look at the comparison there. Okay, so one of them is triple long, one of them is triple short. So the triple Qs themselves are up, you can see over the past 200 days, they are up roughly 16%. The triple long should be up 45% or 40-something percent. It's only up 35. And if you look at the short one, it's down 23%. What I'm gonna do is I'm gonna scroll over here. Watch this. I will scroll until I see the NASDAQ at 0. Hold on. I'm trying to get to where the NASDAQ is actually at 0. And it may not, it'll take a while because I have to go way back here. Well, that's not gonna work. Okay, well, it was back here about 900 days ago. That's about as close as I'm gonna get, okay? So this is the past 616 days. The NASDAQ in red, which is the benchmark, that's a baseline for these, is up 11.32%. If you look at the triple short, it's down 35. That's actually what it should be. If you look at the triple long, it should be up 33%. In fact, it's down 30%. This is the problem of holding these things long term. They decay. Do not buy them long term. Do not hold them long term. Do not buy them long term. These are meant to be a couple days, maybe a couple weeks, but you'll get slaughtered if you just hold them over time. If you held QQQ over a 5-year period stayed exactly where it was at, it moved up and down, but ultimately came back to the same price, and you held one of these double longs or triple longs, whatever, over that period of time, they'd be down massively, like 50-60%. Even though the underlier, triple Q, is right where it started. Dangerous. Tom says, the triple trend is your friend until the bend at the end. Yeah. Yeah, that's right. You were the FNGU guy. He was in that one all the time. But if it's trending strong in your favor, great. But you're still not going to typically get your 3-to-1 as they claim to be. Dangerous one. So I wanted to say that one, and then I'll talk about the Tesla ones another time. So let's look at, I got so many tabs open here. I wanted to real quickly look at the earnings, and we'll check out the earnings for today and for tomorrow, and then I'll wrap up here. This is what happened for today. You can see a lot of green on your screen here with regards to who beat. You had Tesla beat, Thermo Fisher, IBM, AT&T, Lam Research, all beat, but most of them were down on the day. Meta, we know, is down almost 12%. IBM was down about 6%. But I'll scroll down here to Boeing, who had a huge beat on earnings, right? They were great. They beat earnings by almost 21%, yet down 2.87%. Boston Scientific was up on the day, and that's it for today. Here's the big stuff for tomorrow. This is the big daddy for the week, actually. Hello, bring up my Microsoft. And there she blows. So you got Microsoft, you've got Alphabet or Google tomorrow, but if you're in the drug stocks, you've got Merck, you've got AstraZeneca, Caterpillar. So those are some of your big names coming out tomorrow with earnings. And then on the economic calendar, the really huge stuff happens on Friday, but we do have some announcements happening Thursday, and here's what they are. You have advanced GDP 1 hour before the equity markets open. You have pending home sales about 30 minutes into the trading session, and that's the big stuff. There's one other piece here at the bottom. You see here it says Bank of Japan. It says tentative. Their announcement times are not definitive. They're kind of all over the place. So they're supposed to make an announcement tomorrow with regard to the Bank of Japan policy rate, and the markets right now are expecting them to be staying the same at under 0.1%. Really, I have a hard time believing that, especially after we've looked at this USDJPY at length. You know, you look at their recent raise. Let me get rid of the triple Qs on here. 1 second. You look at their recent rate increase, which was back here just a few weeks ago. Well, the market's gone haywire ever since. They need to keep raising rates to choke this off, or it's it's going to get much, much worse. And I tell you what, if it gets to 176, I'll book a trip to Japan. We'll go business class on that one. It's going to be a fun one. So just something to keep an eye on. If you are a currency trader trading that Japanese yen tomorrow, you could see some wild swings in the yen at any moment because of some rate announcement. And my gut tells me that the Bank of Japan needs to be raising rates more aggressively. Look where they're at. They're at 0.1. If I go out here and if you look at the left-hand side of this screen, I'll see if I can make this bigger for you. Shoot. There you go. It's about as big as I can get. If you look at the left-hand side of your screen, these are central bank rates from around the world. New Zealand, 5.5%. US, 5.5%. UK, 5.25%. Canada, 5%. Euro, 4.5%. Australia, 4.35%. Swiss franc, 1.5%. Oh. And then Japan, like pretty much at 0. One of these is not like the other, right? Something is wrong. It needs to, in my opinion, this should be much, much higher. But it is what it is. I'm not running a country. I'm just trying to manage my own accounts. So there you go. That's your big news for tomorrow. And we'll talk about Friday's core PCE price index numbers that are, of course, going to happen on Friday. We'll talk about those a little bit later on. So that's going to do it for me. Hope you guys enjoyed today's show. Hope you learned something. Hope you made some green out there. We'll see what happens with Meta on the open. I may have some new trades to talk about for tomorrow's show, but we'll see. It could be a pretty aggressive one. Anyway, thank you guys so much. If you have anything you want me to discuss on tomorrow's show, send it in at TraderMerlin@gmail.com or go down below any of our YouTube videos. Our YouTube? Like there's a team here. Under my YouTube videos until I finally get enough to build a team over here. Put any comments down below those YouTube videos and I'll incorporate those into tomorrow's show. And my attempt to have kind of a TV-looking reel of events and unfolding for the show. Anyway, thank you guys so much. I will see you tomorrow. Take care.